Good morning, everybody. This is June the 10th, 2015. Hope you had a pleasant evening. Uh, One more really hot day before we get back to seasonal temperatures in the midday. In the mid 80s, I saw 100, 101 on the car's thermostat driving to the gym last night. That's the first time I've seen them this year. Officially, we weren't over 100 yesterday, but it sure felt like it. To me, one more hot day than moisture is supposed to come back into the area, which would be welcome. It's going to be a very interesting market today. The financials around the globe got slammed. The Bund is over 1% right now. It's still historically low interest rates. I think we're about 2.5% on the 10-year. And you can see that the selling started in London. Asia, China doubled its debt swap program for municipalities, given their weak credit ratings. And so we're in this situation once again where W and X quite often when the market is sold, you can see W went down a tick below the overnight session low, then it's come back. So quite often W or X will set the high. So we may have pretty good support down here in this 16, 18 area. So no news to speak of today. We've got quarterly services report where they'll examine and take a look at the composition, the compensation and composition of our service markets, but it's not usually a piece of news that'll move the market. Then we have crude inventories minus 1.5 million barrels. So no news coming out of our country that could shake up the markets. France's and Italy's industrial production was well below the forecast. Great Britain's was split with manufacturing, industrial production off 0.4%, but overall industrial production up 0.4%. So the economic news continues to be split around the globe. The optimists, which would include the Fed, and that could be for political purposes, but the optimistic domestic analysts say that the economy in the United States is going to snap back and show 3 to 4% growth in the second and third quarters. And that's where the bet is right now. Is the economy growing or not? Up until about a week ago, the economic news was decidedly pretty weak in the United States. And if you look at the unemployment news, we still have fewer people employed today than we had at the peak before we went into recession in 2008. So tough to make a call. It's really difficult to move paper when the market is selling. So there's a pretty good chance that the low is in. So we'll put a 13 to 17 buy, and then a 5 to a 9. But our financials have really been heavily sold, especially 30-year paper. The knob spread was at 22.26. It was at 24 when the market closed yesterday. So it's off over a full point. So the 30-year again is where the action is. Okay, looking at the structure, this 21.5, 25, 24.5. So 20 to 24 is where resistance is. 23, 27 is going to be our first sell, and then 31 to 03 will be the second sell. And the market is heavily oversold, so it could come back pretty quickly. I think there's one sell left in the market, but if we don't take out the overnight session low, just due to the 10-year and the fact the market's oversold, that we'll see buyers come in the form of primary dealers to support today's auction. So we'll play for one short. We can't take out the overnight session low. We'll switch to the long side. Similar situation in the 30-year. This high volume number at 29 pulled the market to it. We got a low of 26. We're at 48, and we'll do a WX split. So there's a seller at 4 to 6 right now, and the question is the low in? And so we've got a higher low here. So these guys are playing that the low might be in. Structurally, we've got this 9 to 10 area, 10, 11. T period high here at 11. Right now, this 7 to 11 looks like a pretty good sell. I mean, one that might develop for us. And then if we get through that, 19 to 23 playing against the London high. On the buy side, 24 to 28. That'll make it 25, 29. And then 17 to 13 for buy 2. But there'll be extra volatility in the 30-year because of the knob spread and because of its sensitivity to interest rates changes. Okay, crude, gold were both up overnight. Internationally, the markets in Europe are looking for Merkel. And the battle internally has always been between Merkel and I think gentleman's name is Schäuble, but I'm not sure about that. And Merkel, Greece is having private meetings with France's Hollande and Merkel to see if they can't break the impasse. And the impasse is that the European Central Bank and the German Central Bank are saying, you sign this agreement, you will adhere to the terms of that, and if you do, we'll give you the money that you request. And Greece is saying, the anti-austerity party is saying, we can't adhere to them, and we're not. You got to give us a little relief here. So my guess is that they'll probably sometime this month come up with a comprehensive deal that'll get them through August, July, and June. And we'll see if that happens. Merkel's probably the key to the deal. Okay, you can see London right here. We moved into where we wanted the second sell zone from yesterday. So looking at where the spill in the market was, we had this high of 87. We've gotten through that. The market that did sell came off the high, started at 90. So resistance is at basically 89. So 89 to 91, sell 1. Then 95 to 97, sell 2. And that's the idea that we'll get a retest of the overnight sessions high. On the buy side, 80 to 82. And then 75 to 77. Okay, the euro has rallied as it normally does in anticipation of a deal. The private meetings between Merkel and Hollande and Greece. And then it's got higher than we thought it was going to go overnight, but we had that 1350 as a pretty good sell point. And again, doing our W split right here. So we've got selling 113, 113.10, and then we'll make it 45.55. On the buy side, 12.50 plus or minus. Stops beneath that, then 12.25. And the pattern is this contract rallies if a deal appears imminent, About to be done. When the deal is done, it sells. And I imagine that pattern will hold, as we can see right now. Again, I don't think anybody minds Greece leaving the European Union, but it has to be done in an orderly fashion because Europe's banks are the ones that buy sovereign debt. And their 50 largest banks would take significant haircuts on their capital if Greece were to exit the EU in an unorderly fashion. Okay, looking at crude oil, very, very strong overnight. I don't know I didn't see any fundamentals out there. The EIA inventories are expected to draw 1.5 million barrels, so where might resistance lie? That's 62, 62 and a quarter. The 62 area, say 62, maybe as high as 75. We've got this low over here at 64. Got this high right here at 63. So the 62, 62.50 area is pretty stout resistance. If we get through that, then it basically moves to 64. So 61.75, 62 is resistance, sell 1. 62 and a quarter, 62.50, sell 2. On the buy side, we broke it out at 61.15, so 61, 61 and a quarter, buy 1. Then 60.50, 60.75, buy 2. Okay, the E-minis, I think that 92, 93 area is a pretty important level. It's up. We did not break it out to the upside yet, but it is pointed higher this morning. And looking at this chart, you can see that this 92 area right here, 93, is pretty important. So if we can stay beneath that, the sentiment, the market can sell. We bottomed yesterday. We had a pretty strong P formation. We're up higher in the overnight. China's markets are Asia's markets were flat. The EU's markets are higher, based on a potential Greek settlement. So here's where we are. So resistance is going to be at 90, 92. And I think that's strong enough resistance that we can take a shot at a short there and see if the market will pull back. So 89.91 is where current resistance is. It's pointed higher. And if we get through that area, then 94.96 will be the second sell. On the buy side, we'll make 80, 82. Kind of buy against the bottom of value, buy 1. And 75.77. No news to drive today's trading. Like I said, Europe's markets were up on split information, mostly on the Greek deal. And Asia's markets were flat, and our market has followed Europe's markets up. Okay, I'll be back with you as soon as I can. Got a bunch to do.